Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, June 10, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? The first thing we do is take an assessment of the daily chart, see if we've had any material change over the last day or several days. Then we're going to take a drill down and do some exercises with smaller time frame charts. There's always lessons to be learned there. We'll take a look at other parts of the market and we'll get our big picture assessment. So what's the S&P doing from a daily chart perspective? Well, over the last few days, she's basically eating time off the clock around the highs. Not much has changed over the last couple of trading days. So as you can see in this horizontal blue trend line comes in at 533.07. What is that line? That is the breakdown candle high. She, for the most bullish position to be in, must stay above 533.07. For the uber most bullish position to be in, she stays above the trend line. Today, she closed above the trend line. Above it for a day or so last week, dipped below by Friday's close, closed back above today. It's not really of consequence where she is relative to slightly above or slightly below the trend line. The trend line comes from a very long-term perspective. Therefore, to be riding the trend line for a while, just like she did before, is normal garden variety behavior. Let's give a refresher course of where she is or where the trend line comes in relative to where Mrs. Market is. You go to a monthly chart, and for this particular trend line, you have the high from October of 2007, connecting the high from January of 2022. And as you can see, she intersects right where price is at present. You drill down to the daily chart, and that's where we are. At this trend line, riding this trend line, trying to peak her head above the trend line. Above for a few days, below for a few days, around the trend line is normal garden variety behavior. Closing daily above the trend line, day after day after day, weekly above the trend line, week after week after week, is obviously the most bullish position Mrs. Market can be in. So here's the gauge. This is what we're going to use as our guideline. It's obviously the trend line, but more importantly for the not so bullish case for the short term is the 533.07 breakdown candle high, recapturing that from above. Once above, recapturing that on the way down when and if she ever does that will be the first hint of a little bit of bearishness in the air. Staying above 533.07 is the bull case. Friday, she made a new all-time high. Today, a new all-time closing high. It's not really of consequence. It's more information we could know. Above all the moving averages, the trend is your friend, comfortably above. There's no issue from a daily chart perspective. There's no issue from a weekly chart perspective. Above all the moving averages, the trend is your friend. What happens when we go down to an intraday chart starting at the 4-hour chart? Do we see any difference, any material difference? No, she's simply eating time off the clock, running sideways, hugging the trend line. What about a 2-hour chart? Same routine, just going sideways, hugging the trend line. 1-hour chart, going sideways, back and forth, hugging the trend line. As you can see, she's run a test of 533.07. As she got above, came back to retest it, bounced off of it each and every time. That tells you that number is important to Mrs. Market. That seems to be the rescue place, the near-term rescue place. So therefore, what we do know is, and to reiterate from before, back below 533.07 is the case for a leg lower in the market. On such a leg lower, intraday traders from a live room perspective, inside the number perspective, they will have those intraday numbers where we would expect a tradable intraday bounce opportunity. 531, give or take, may be one of those numbers. I would write that down. Intraday inside the number, and live room members will have the exact figure on an as-needed basis. For our purposes here, we'll call it a spike below 531. What about inside the numbers today? Here's our early morning 0 dark 30 commentary. And the net is what you'll find while the market gaps slightly down today, a little tiny bit. She never got to a number I was willing to buy. And by the time she got to a number we were willing to sell, it was too slow. The morning rush hour was over. It became a don't short a dull tape environment, and she grinded up/sideways for the majority of the afternoon. It was not what we call a trader's tape. So what I urge you to do is pause the video, read the notes anyway, go back to the chart, and double check the work so that you can see where we were anticipating having a trade today and understand why that trade may have been there. See if you can do the work. I just want to point out a couple of important numbers as the just-in-caser. If they were to begin closing candles above 535.10, that would open the door for 535.90, give or take. Well, what happens there? That's overhead resistance. Here's a 5-minute chart. Right at the vertical is today's activity, and you can see the horizontal blue line at the top here at 535.90, overhead resistance. We had an early overhead resistance zone between 534.50 and 535.10, and you can see the 535.10 A happens to be where the market is in the after-hour session as I make this video, and B happens to be where the market also found overhead resistance and pulled back. So as you could see, we certainly had the numbers. Whether or not the trading was ripe for day trading purposes is a whole different story. Tough tape today, slow tape, never short a dull tape. Short trades in a grinding slow market near all-time highs are very difficult. You have to be very, very precise. Read the notes, go back to the chart to double check the work. What do we have on tap this week, by the way? Well, we have the FOMC Kabuki Theater event culminating Wednesday afternoon. We have the CPI and PPI data shuffle. CPI Wednesday morning, PPI Thursday morning. So right in between those bookends, we have the Fed data shuffle. So we should and normally will get some volatility around midweek, but right now, guess what they're doing? They're, air quotes, of course, waiting on the Fed. What about stocks on the move? Any opportunities there? Were any traders in stocks on the move today from inside the numbers or live room that made money? Post it under the video. Let's hear it. How about AMD? We had pretty good participation in AMD today across the board. I know that. So we'll take a look at that chart. That's the only one of two that hit its entry objective. Here's a 5-minute chart of AMD. As you can see, they were getting a buzz cut at the opening bell. Right into what? Into a support zone. Came into the zone, went to the second number, bounced right back in the other direction, and gave you the deal. We had a lot of traders in the live room. Were able to ride this for several points today because we were talking in real time about the potential exits. Very simply, I brought over the hourly chart to the live room folks. We talked about it, and I put a couple of additional places on the board that would be reasonable resistance/targets on the long trade on the ride back up. Where were they? And let's see if we can learn why that was. The first one was right there, and as you could see, that's right where the market went to out of the chute. If you go down to a lower time frame, you could see that was a target. They stalled there, they pulled back a little bit, and then went to another target. We'll get to that in a moment. Why this target is the question. It's clearer on the hourly chart, so I'm going to point it out. So when the market was rallying or trying to rally, it came back down and had a shimmy before stabilizing. And as you could see, this candle here and this candle here is the market telling us This one here specifically telling us that that place is important. Market had every opportunity to fall back down, was rescued, and went up. Therefore, that is an important place. It's not me telling you that. It's not Cousin Jimmy telling you that. It's the market telling us by a visual perspective. Then I simply did the same exercise, put another line there, and you could see that's the high of day. And I said that's the high where there will be another target opportunity. Traders either took the rest of it off there or left a small trailer. They started to come down. You can't get hurt on the trade. Multiple exit opportunities after the base hit on AMD. Nice work, live room AMD today. What about crude oil? Want to bring this up one more time. Gave this out to the live room last week. 72.78 to 72.60 was the place. Talked about a target this morning. Gave it to the live room also. What was that target? It was 77.70. A target does not mean a short. A target is an exit opportunity. What did they do today? They reached the target. Funny how that works. What's the next target? Right here. 79.25. Next target. Crude oil. About gold. Gold futures. Gave this one to the live room last week. 23.15. 23.15 was a target on the way down. Support. They should bounce right off 23.15. They spiked it by a few bucks and bounced off 23.15. Another live room opportunity. We trade stocks, the S&P, the NASDAQ, the Russell 2000, gold, silver, platinum, soybeans, oil. It doesn't make any difference. Natural gas, currency pairs. I'll give you prices, targets, support, resistance on any chart under the sun. We talk about them all in the live room. Whatever traders that are members want to talk about is what we talk about. Whatever's moving, wherever there's an opportunity is where we go. We go where the ball is. We're not waiting for the ball to come to us. We go where the ball is. Where's the opportunity? What's going on over in Camp IWM? Interesting candle today. We had a gap down. We had a rescue. We had a reversal. We had a nice close. They filled a gap. You could see a gap down here. They filled that gap today, bounced off of it, and closed well. That's a bullish signal. They only closed slightly up from where they were on Friday, but based on today's intraday activity, it's not how they open them. What's important is how they close them. They opened them down, they rescued them, and they closed them well. That's a bullish signal on its face. Friday, she got below, this is the weekly chart, the 20-period moving average, still below the 20-period moving average. Use it as a guideline. It's not really support or resistance at this point. They've been back and forth through it of recent, so it doesn't have the same luster as it would have when they come from afar away. However, we use it as a guideline back above the 20, puts them back above all the moving averages, and then what happens? Well, the trend is your friend. All this can certainly change if we get some activity around the Fed, CPI, PPI, whatever excuse they want to use to move the tape. If they do move the tape, these charts will change. They will move. However, keep in mind, it's either way. We don't know whether whatever's discussed this week, whatever data released this week, will have a positive or negative effect on the market. We don't have a bias. We wait to see which one it is, and we see if there's an opportunity laying there. We don't guess in front of it. We trade the reaction from the event. We're waiting on the movement. It's a better deal than guessing which way they're going to move ahead of time. You'll be wrong way more than 50% of the time, even though it appears statistically you'll be right 50% of the time. But if you run the numbers and insert your biases into the middle, you're going to be wrong about 65% of the time. What about the folks down at the transportation department? Nice, decent update today, 136 points, almost 1%. Canary in the coal mine-ish. They are, in fact, below all the moving averages, but let's keep in mind what happened down here. So remember this place over here. So they had already spiked this low. They ripped it back up in the other direction. Now they're eating time off the clock underneath the moving averages, building energy to move through. The only way that doesn't happen is if they take out this low. They haven't done that yet. They may do that, but we're not going to assume they're going to do anything. We had a pickup in volume today on the uptick. Weekly charts in between, a set of 2 each moving averages. You do have some bona fide trend lines. Below she's bearish, above she's bullish. Where is she now? She's in between them both. We'll call it no man's land. But wait, there's more. Whenever you have something that may not seem conclusive to you on a chart, what's the first thing you do? Go to another chart. In this case, we're on a weekly. Let's go to a monthly chart. Now you look at the monthly chart and you say, wait a minute, same trend lines, that's fine. She's above all the moving averages. All she did was come in to run a test of the 20-month moving average, and it's holding. See how all charts act and react the same way? You just have to be looking at all the charts. Technically, from a longer-term perspective, there's nothing wrong with the transports. Obviously, things morph from smaller time frames onto larger time frames. We get the big picture from the larger time frame. If she doesn't make a new low over here from last month's low, the month of May, then that's it. She's going to head back up and bounce off that 20-month moving average, headed to where? This trend line and this breakdown candle high. Funny how that works, isn't it? Back to the weekly, break above that trend line, the upper trend line, and guess what happens? She's bullish and she starts heading for 16.6, give or take. Get above the trend line and she's heading for these pivots up here. Progression of events. What about the Q people? Anything going on here? Above all the moving averages, trend is up. She's your friend. Eating time off the clock for 3 or 4 days, around new highs. Nothing to do with this. You wait. What are we waiting for? We're waiting for the market to tell us one thing or the other. Is she going to get back in the most recent breakout area, meaning underneath it? Or is she going to break out to the upside? And if she does, can we identify the next target on the upside? Well, the next natural place is around 470, but we'll have something a little more refined for the live room people. What about the XLF? What's she telling us? Well, she seems to be making a bearish type of situation, down a little bit today, 0.4%, still making a bearish situation underneath, capped, riding underneath that 20-period moving average, kind of in between the 20 and the 50. Is there something brewing in the financial complex? Time will tell, but nothing material is going to happen before Wednesday's Fed announcement. The financial stocks are obviously sensitive to what the Fed does, interest rates, liquidity, all that stuff, so she's waiting on the Fed, the XLF is, and her components, all the big banks. What about Smashmouth, the Philadelphia Semiconductor Index? Anything going on here? Nope. New highs, eating time off the clock, grinding higher in an uptrend. Trend is your friend. Nothing to do here other than A, find the target up north, which I don't have at present, or B, wait for some kind of a pullback operation, support number, reversal candle, sign or signal of a trend change. Any one of those things may give us an opportunity. Today, we're spectators watching Smashmouth grind up with some of the monster stocks like Nvidia that just went through a 10-for-1 split, came back down to earth. Look at this daily chart of Nvidia. This is some kind of phony baloney shenanigans candle. It's not real. Market was never up at 200 today. Here's the hourly chart. This is the new reset version of Nvidia. This shenanigans may have something to do with the stock split that occurred from Friday to today. We're not going to read too much into that, but Nvidia does have to come back down to earth. It's the same chart that it was at 1200 or 1100 or 1050, whatever it was, as it is at 120 or 110. It's all relative. Nothing has changed. Near-term support, 112.50. Write that down. Put it on a sticky note. About the bond market pulling back after hitting our target from a swing trade perspective. Funny how that works. Also, bond market will be sensitive to whatever the Fed says or implies one way or the other. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.